All right, I'm about to make this as quick as possible, so let's go. So we got the 4-hour chart, we got all the sellers that are right here, and then we got the slow resistance liquidity right here. So we're aiming higher time frame, narrative, bullish. We are in a daily fair value gap. Come on. Why is this messing up? So weird. It doesn't want me to go to the daily. Weird. Anyways. Okay. So price ran ages high. We got these buyers, Friday's buyers that are in the market. Let me turn this music down. So right here we got the buyers that's inducing more buyers. As soon as the week opened, we're getting people who want to jump in the market real quick. We get them in the market. We get the sellers in the market with this candle. Then we get the buyers in the market. We run out the sellers, and then we display slower. We run out the buyers. So right after it runs a high, it runs a low, lower low, higher high, lower low. So after the 6 o'clock candle, that is confirming to us that it's possibly going to run out the first initial consolidation right here, get out the Friday buyers out of the market, and we can trade into the daily fair value gap. Also, it's a 4-hour fair value gap. And so we can see the why prices want to go lower. Also to induce more sellers into the market for people who see this as support and resistance, right? Support and resistance traders are in the market. We have low resistance highs right here, so we can still see price going up. So we're still remaining bullish. So around when 8 o'clock candle closes, creates a fair value gap. 9 o'clock, we are looking for sells into this Friday's low. So 9 to 10, we can look for sells, and then once we reach into this fair value gap, we can start looking for buys. That's the higher time frame. And now we go into the 15-minute. When we go into the 50-minute, we can see price runs out the highs, all these white candle, and then we break with strength. Support resistance traders are in right here. They're profitable. We expand low. And from when we expand low with this type of displacement, we can do small sells into the constant encroachment of this wick, low resistance lows right here. So again, that even confirms that price is willing to go lower. And then we create this little weird wedge. So we got these wedge traders in. A lot of people see this. It's taking too much time here. It's giving too much people an opportunity to sell. They are profitable, but if you just don't have the timing, because at 9:30 we run lower, these people are profitable. And then look at what speed at 9:45. Within 15 minutes, price runs out the high from 8 o'clock. We run into the fair value gap, so we could be looking for possible. We're not looking for sales actually. On a lower time frame, we could possibly look for sales, but we're not looking for sales because it's traded into a higher time frame. But when price closes at 10:15, now we have 15-minute confirmation that price is going to be running out the buyers from the 9:30 open. And so from 10:30 down, we can look for price running these 9:30 buyers, and then we wait again. You can see how the body's respected fair value gap on 15. So as long as it doesn't close, it could tap into the discount of this fair value gap. So we could be looking for something like that. Ideally, we wouldn't want to see it close below this fair value gap. And so price starts working. We got a consolidation. We expand. These are the first, and so we ran out the first buyers here, and then we got buyer here, just short squeezed buyers, and then it goes one more time. So we could take a buy into this fair value gap because price could continue lower. Who knows? We have low resistance lows right here, so price could want to run that down. So price closes strongly 11:30. We from 11:30 to 1 o'clock we wait. Price runs out the buyers right here. Bodies are respecting, and then from 1:15. When price displaces and closes above higher, we can look for it to run out the sellers here, and then these equal highs right here. And so we'll be looking for buys around here. 1 o'clock. Sorry, I got my markups right here. So 1 o'clock. This is an area where we could see them inducing, right? Because they can bring in more support and resistance traders, trend line traders, etc., into the market. So create more confusion, get buyers who want to see this continue up. And so we got buyers and sellers in the market. Anything into this fair value gap, we ideally don't want to see price close below the constant encroachment of this fair value gap. So it could do whatever. It tapped into the premium of this daily fair value gap and also this inversion fair value gap. And then from 245, we expand higher. After that expansion, ideally, I would have been looking for buys because of these low resistance highs. And again, these highs up here and bullish on the higher time frame. Again, as long as price doesn't close, so price taps into it, and then 330 creates displacement higher. Okay, now we're definitely confirmed. And then from 140, 345 on, could be looking for buys with this displacement closing above here, obviously closing above the medium threshold of this order block, extra confirmation. And so now we go into 10-5. We go into the 5-minute. The 5-minute is beautiful. I just got to find a way because I can see both selling and buying. I probably have to put low risk because I would see multiple times to get into the market, and I got to find a way to make it higher probable than just playing around. And so We're here. 5 minute, we expand higher. We got a strong wick. Creates a swing high. So now we got sellers into the market with speed. Now we really got the sellers feeling good. We go into the 15-minute fair value gap. So from the 205 to 210, low resistance highs right here. If again we're bullish, we can buy it. We can do a buy from 205 to 210. And then once price runs, it doesn't close. We wait to see what price wants to do. Price attempts to run higher. And we're just waiting to 5 minute. Price runs high, runs out the sellers. So we run out two sellers. The sellers twice. Sorry. And then 440, we run with speed. We got these wedge traders in. You see this right here? We got equal highs right here. So when price runs with speed, the body doesn't close. Again, and we're still looking for buys. So we'll wait for a change of state of delivery, which happens right here and above this gap. So once that occurs, 3 o'clock candle, we can look for buys. Create a swing. 330, we displace higher. Now from 335 forward, we can look for buys into this fair value gap possibly. And then price expands, all white candles. We got a 15-minute fair value gap. Price trades lower, price trades lower. We got a fair value gap right here. We're inducing sellers, so we can see what price wants to do. We could look for price to go into this fair value gap or the constant encroachment of this wick, which would be boom, boom, 350 to 410 macro. We ran out the first initial sellers. We got buyers in right here, and then we sold, run out those buyers. Price trades lower into the fair value gap. We run out these buyers right here, and then so from 410 to 425, we could look for buys. This is a high resistance range, and I have to remember that. And so after this would have been deadly after it closed below here. And then now we're gonna go into the 1 minute. We go into the 1 minute. We're just looking at how ranges are formed and how they entice these traders in. Okay, so we got a lows. So we got these buyers from here. Buyers are ran. So we got the first initial buyers. Look at that strength. They're ready for a breakout. Price runs them one more time at 128. And then we start trading higher. Price creates a swing low. Now we got buyers into the market. Support and resistance traders, right? That's one thing I forgot to mention. That this area, we could see a lot of things happening because support and resistance traders are in. You can see here. And we're in a fair value gap as well. So breakout, resistance turns to support. They're in here, so we can see confusion, consolidation, bringing people into the market, then chop them up. Okay, so we got the buyers and the people who bought below put their stop loss below here, and then with this run here, this speed, low resistance highs, and they got the bear flag traders in. Bear flag trades you can get in if you. It actually works if you can get out. Like it leads to some form of expansion, but the timing you got to get out because look at how fast it comes back. So we have a false breakout, and then with speed, we come back low, but we still protect them. We create a low resistance lows. We're enticing buyers. Look at 3 consecutive candles. We run out the sellers with this initial high, and then with speed, we break market structure lower. So once we did that, closing below this fair value gap, we could look for sells from 2 o'clock, and it's the 150 to 210 macro into these buyers right here, into this fair value gap. Definitely minimize risk as soon as it reaches the fair value gap. And look at how with speed it runs out these buyers. And now we wait for initial buying. And so price runs, never the first time. It seems the first time. If it runs the first time, then we're out of it. We want to see some fake out or running of a low first. Okay. We got these low resistance highs. There's always an opportunity. We got these trendline traders in. And so we run with speed. Look at, so the sellers who's been in the market since here and here, once they seen this and price trade lower, we got support and resistance traders right here that's enticing to here. Look at this big wick, and we're at this fair value gap. And so they use the fair value gap to create more liquidity. We trade lower with speed. Price respects the constant encroachment of this wick. And then we trade higher. Once it closes above here is a change in state of delivery. Could wait for a break of market structure right here. We gap up and we break a market structure from even 210 and forward. We can look for price to run with speed to these to grab these sellers out of the market. And so on the 5-second time frame, can look for sells. Price trades higher, runs out the sellers. We create more, maybe double top traders up in here. Body respects. So when we go into the line chart, we can see equal highs on the line chart. So because we see equal highs on the line chart, we can expect or suspect that price is probably going to induce buyers again, close above here. As long as it doesn't close below above the constant encroachment, then that means if we want to see continue buying, we want to see a close above the constant encroachment. So it taps into the constant encroachment, the body respects it. We expand lower, and then to 18, we run out these buyers. And once we see that, then we can see that, okay, let's look for our buys, because again, we're still buying. Low resistance highs right here, so we're getting sellers into the market. We got a volume imbalance right here, and then we have this balanced price range or this fair value gap, inverted fair value gap. So we can start looking for buys from 219 to 220. And what we do, price trades back into this fair value gap, and then we run out the buyers, sellers at 228. So sorry, let me jot this timing down. 219, I'm gonna start trying to 219 to 228. We low resistance highs. Now we got trendline traders in. We trade into this balanced price range. We can see what price wants to do. Close above. Trade. We want to see it close above here. It keeps on running the higher. If it doesn't close below there, we got low resistance lows right here now. And it may want to run out these buyers because these buyers are still profitable right here. So I still have to remember all that. Just because I ran the buyers here, long term, these buyers have been in the game for some time. And definitely if they saw this, they're putting their stops below here. The ones who did it too soon got stopped out. So I got to remember that I could be able to see that. That could be a potential. So when price doesn't close below here, and then we'll wait to see if there's any confirmation. And this fair value gap, once price closes below, this is not ideal. And so price runs out the buyers here. We trade higher one more time, and then the buyers respect the fair value gap. Once we close below here, to be honest with you, after I would have saw um, uh, it run out all these sellers twice, run out these sellers twice. These trendline traders, bear flag traders, this fake out, and then a break of market structure with all bull candles, and then it breaks below here. Once it did that, I would have been looking for buys. I mean, sells, temporary sells because of these buyers here. And look at, we can even do this. We got traders who see it like that, and where you see that candle happen right there. And so we'll look for confirmations from 239. And then with speed, we run out these buyers. That's confirming I wants to go and possibly run out these buyers. And we close below this fair value gap. 241, we tap back into the fair value gap. It doesn't even tap into the constant encroachment of this wick, so it looks like it's weak, like it want to run to price fast. Bodies respect the fair value gap. Low resistance highs now. We run. We close below the constant encroachment of this wick. Now, once it closes below here, then we can, and we can see that price wants to run out possibly these buyers right here, these buyers, and then these buyers. And this would have been the logic. Bodies respect once it runs out the buyers. We got this fair value gap, so we don't do nothing. We just wait. We'll see what price wants to do. All white candles. Look at what speed it induced sellers here. Breakout traders are in. And then we run with speed for the people who move their stops right here. Definitely at this swing. Run higher into this volume imbalance. Price change lower. Now we're on alert to see if price wants to go either higher or lower, but we're not looking for lower prices. We're just looking for confirmations for buying. Price closes below with this fair value gap. That's not something we would want to see, but price might want to go to the constant encroachment of this wick, and we'll be willing to allow that as long as we don't get strong closes below this 15-minute fair value gap. And now we go on to this wick, and we could see that price trades into the 25% of that wick. It doesn't need to go to this 50% because this candle did that. And so Price trades low. We wait for our confirmation. Once we get a confirmation, so we got consolidation, we're getting these people, we're getting more sellers in, and then it runs out these two lows, and then we displace higher above this volume imbalance, and then from here we could look for buys. So this time is once 257. $259. Okay, this is where it gets a little bit tricky. Price runs out these double tops. This double two highs, double tops. Traders, we inducing more support and resistance traders, and this is a high resistance range. Look how many times it's been protected. And so we could see that prices may struggle or create more liquidity here. So we don't want to see it close below here, but price closes below here, so we're not into the market. Price may want to go into the fill in this inefficiency right here. Price trades higher. When price trades higher at the 202, 302 candle, and we're in that macro, I would have wanted to see buys happen. Ideally, I don't want to see it close below the median threshold. So once that occurred, I'm not doing nothing. We got these buyers now in the market. Look at this low, these lows. Price consolidates. We got a consolidation. We got and then price runs out these sellers, and then we expand lower. We got these lows right here. Price changes to the order block, and then this displacement at 312 would tell us from this is a breaker. So after 312, that could be a sell, to be honest. That could be a sell into these buyers right here. These are so we got these buyers came in. We got other buyers that came in. And so they probably move their stops right here. And then once that occurs, we can start looking for buys. So from 213, 313. And then once we go from 313, 315, we need to wait for confirmation. Price runs out these lows. Now we have some form of conversation because I got these buyers out, right? Support resistance traders too, like you see these equal lows, runs out these. This is consolidation. Into this volume imbalance. We run it out. Once we run, we still wait. And so honestly, once this closed, we wait for a fair value gap to possibly go into here. Once this closed and didn't create a fair value gap, we're not in it. Price trades low. Now we have low resistance lows. Price trades another here. Because the reason why we can expect that, because look at two consecutive white candles, and yet it ran out these sellers right here. But what about the buyers? Yeah, we got buyers here that got ran out, but this is more of a draw, an emotional draw. Two strong white candles, and so we could wait for that. And so price ran them out, runs out lower low, higher high, lower low, and then when we break, we wait for a confirmation. Be patient. We can look for buys into this fair value gap conservatively. But we are initially buying. So remember when we're playing this type of side of the market. So once price breaks, we get this wick. We do have a fair value gap and a volume imbalance, and that's enough. And if it wasn't enough, we can go on. We can expect for price to once it breaks here, it can take out these buyers right here, definitely. And so we can expect that this could possibly occur. But after, to be honest with you, after this expansion, this body closing above, I would have been looking for buys from 229. It didn't leave a fair value gap. That's something I should know. But it doesn't really leave a fair value gap to here, to be honest. Doesn't leave a fair value gap. So 230, we look for a buy. 330, sorry. See what it does with the fair value gap, and their sellers up here. Oh, all right. This price trades high. If I wasn't smart with it, price closes below this fair value gap, runs out buyers one more time. We respect the fair value gap. the volume imbalance, sorry. Then we 338, we close strongly above. That would have confirmed that we're going to go for these buyers. Price goes, induces the sellers, runs them out, gets the buyers in, runs them out with this candle at 350. Now we're in the macro. So we're running out sellers. And then we run out these buyers. Sellers, buyers. Then we want to see this break. With low resistance lows. We do have wedge traders. That's something to keep in mind. And so when this occurred, we could still be looking for buys at 352. As long as the buys don't close below this constant encroachment, that means it's still going to go higher. To go for these sellers. Once it runs these sellers, you can see that the body didn't break, close below. So if I'm in any sells, now the probabilities drop a lot. Even though this is a breaker, there's no fair value gap or anything like that. And look at how much time that price has spent here, right? People could see this. People could see this. And we got these low resistance lows right here. And so ideally we don't want to see price go down there, but we could see price want to go down there one more time. Look at what speed, 259 to 4 o'clock. We run out these buyers. Buys are still respecting the fair value gap. Now we got this wedge forming, right? Boom. We're still in the 350 to 410 macro. So once this wedge is forming, we got this fair value gap right here. So to be honest with you, this fair value gap I would have already bought, most likely bought. We don't break no swing low. That is something I have to keep in mind there. I mean, a swing high. We got buyers, and you got these buyers. So price runs out the buyers one more time. So let's say I lost. Low resistance lows right here. This fair value gap would have confirmed something. So let's say once this has broke, we can see if price wants to trade back into 411. We ran out the buyers one more time. And now, so if we're in here, we see that they ran out the sellers. We got the sellers in the market who saw this, and they see this as a continuation. We got these wedge traders, so that's why, because this is still a bull flag. And so it ran out the bull flag traders, so that's why. Okay, that's why we wouldn't participate in this. Because price can come back one more time to run them out. And then right here we wait, because this range is going to be the most important. Are we going to come back up here? We got the sellers right here. I see all these candles. Look how price is not closing. We close with line. That's all we need. Low resistance highs right here from the line chart perspective. And so we put sellers. And once price trades above here, I'm going to have to put this a different color. Oh, it is a different color. Once price trades above here, does it here, but that's not something we want to see. Price immediately redelivers and rebalance. We go into this volume imbalance, then we trade higher. Once that has happened, we can see that price wants to go into these and creates a fair value gap. Now we can say that it's going to run for here, and we'll see what it wants to do at the fair value gap. And so price trades low right at the fair value gap. That's something we want to see if we're going to go for sells. Because look, it gets them in. We got a volume imbalance here, so we can see what price wants to do. But once we see the strong displacement at 432, we can say that it probably want to run out these buyers. Then we got these swings. We get this little consolidation thing going on right here. So this is what we'll see. So we see these two, this type of consolidation thing. So it runs them out before it closes. So now I'm going to mark up all the times that I mentioned on the lower time frame and then just go from there. This is liquidity matrix. Until next time.